Good evening, VV Nation, and welcome to the channel. My name is Glenn Tompkins, Senior Stock Market Strategist for VectorVest. Glad to be here and glad to present this video to you. So, as we know in the title, how to survive the swings, the volatility swings, and I think it's weighing heavy on everybody out there. You're in a stock, it makes some money, and then all of a sudden the rug gets pulled out from under it and it dips a lot. And then the next day it rebounds and goes up a lot. And you sit back and say, well, why did I get out of it? And this is a tedious thing that's going on every single day because of the news. We have the tariffs, they're on, they're off, they're paused, they're not, it's back and forth. And it's affecting people's portfolios adversely. If we take a look at what's going on in the market, there's the market. By the time you get this video, it'll probably change again. Big up day a couple of days ago, the biggest up day I've seen in like forever. Look at that bar, folks. Look at that bar. And you would think that with that, because there's a 90-day pause on some countries for the tariffs, that the market would still see, or traders would still see, man, this is the blast-off day from the bottom. Let's go, go, go. And then all of a sudden, still no. You look at this candle, though, a lot of wick at the bottom. There's some buying pressures, but the bears still have control. We faded one gap. Let's go see if we can get to fade another gap and see if we can get right footing to get going back up. But it's the swings. It is the swings. So what is the swings? The VIX, the volatility index on the S&P 500. When the VIX is low, below the value of 20, the market seems to be more greedy. It's a greed fear factor. When the VIX starts to rise, there's a lot more blood in the streets, there's a lot more fear, and the market goes down. Now, the VIX could be used for volatility, whether to the upside or to the downside. Looking at the time of this video, though, the VIX is on the rise, but a lot of selling pressure on the VIX. Where is it at right now? Close price of, let's go see, 40.83. Remember, when it's above the value of 20, the market is showing more fear than it is greed. This spike here, the high was high price 60. I saw back in 2008, it spiked all the way up to like 85. That's a lot. That's a lot of fear in the market. So how does this affect your investing in the stock market? Well, one, you're going to need some Dramamine because the market going up and down so much, you're going to get motion sickness. Hey, VV Nation, I'm Glenn.
And I'm Ryan. We've got a special event coming next month, May 1st. We're finally hitting the road. Now, we will be hosting some live streams. Tell them a little bit about the live streams we'll be doing.
We're going to have the Stock Analysis Power Hour. Ryan will host that. Bring your stocks. Let Ryan break them down for you. I'll also do a live stream called Trending Thursday. That's where we go through, look at what's going on in the market, what's going on in the news, and we analyze stocks. We also have a live presentation for those people who will be attending live as well. What's that, Ryan?
Now, we do have the presentation titled Unlocking the Secrets of Financial Success. Now, to register for free and get the details, just go to vectorvest.com/roadshow.
And this is what it's all about. How volatility affects your investments. Your investments, not just mine, but all of ours. Short-term price swings, if you're a day trader or a short-term trader, volatility can present opportunities. Now, I know that everybody out there is not a short-term or day trader, but those people out there are probably doing okay right now, especially if they're selling options. High volatility should be a seller of options. Or if you're day trading, getting in and getting out. At this point, most times you can get in and out throughout the day. But we're at points now where you're going to be in and out within 1 to 5 minutes. That's the kind of market we're in. So that is how it affects your investments if you're a short-term investor. For long-term investors, short-term volatility can be unsettling, but may not impact long-term outcomes. The problem is with that, when I'm looking at my portfolio for long term and I take a 20-30% hit, can I sit through that? I did a live stream yesterday on Trending Thursday, and someone said, a lot of people said that they don't use stops. That's troubling to me. Now, I could understand whatever your reasons are, it is what it is. But stops are designed to keep you from taking big losses. All right. I can't protect you against gaps, but I can at least with stops protect you against big losses, because that's where portfolios blow up. When you get a little loss, it turns into a bigger loss, it turns into a bigger loss, and then it blows up your portfolio. That's why stops are important. But for long-term for the long-term investors, it can be unsettling, but may not impact long-term outcomes. I'm going to leave that up for the debate. Next thing, emotional decision making. And that's where many of you in the room fit. Emotional decision making. If you've made trades based on emotion, I want you to type into the chat EDM for emotional decision making. As a DJ, EDM is some high level. EDM is high energy music. But in this case, it's emotional decision making. How many of you have fallen prey to emotional decision making? Type EDM in the chat. How you get over that? Trade the chart, not your heart. You got hashtag TTCNYH. I need that to go viral at some point. But trade the chart, not your heart. All right? High volatility can lead to fear-based decisions. That's true for many of you out there, and not as much for me anymore, but it played a big role in my trading. Selling in a panic or buying out of fear of missing out. That's FOMO. And a lot of you will see a stock go up and go, man, I got to go get into that stock. It's going up. And just as you do that, volatility will take that win away from you in a heartbeat. This can derail an investment strategy. Emotional investing often leads to buying high and selling low. You need to know you got to buy low and sell high. But emotional investing will change that around. Portfolio value fluctuations. Volatility can cause large swings in the value of your portfolio. Again, do you have the wherewithal to sit through a large pullback in your portfolio? What do you do in that case? And then I get asked the question a lot. So what should I do with this stock or this stock? I'm down a lot. You've got to make a decision, but you got to have a plan. That's why stops are important. Even if the underlying fundamentals haven't changed. Well, you know how that happens? Because you can be in a good stock. If the market's going down, 80% of the stocks move with the market. So you can be in a great stock, but at the wrong time. You got to think about that. All right, a great stock, but at the wrong time. I'd rather take a little bit of a loss on that and wait for a better buying opportunity rather than riding it all the way down 30, 40, 50%, only to say it's going to come back. And eventually, many times it does. But that's a big pullback in the value of your portfolio. Can you sit through that? Opportunity for buying low. During volatile periods, quality stocks can become undervalued. And that's very true. But still, long-term investors might see this as a buying opportunity. You still need to let the market come to you and then let the stock come to you. Impact on risk tolerance. It can test your actual risk tolerance versus your perceived risk tolerance. Well, actual risk tolerance says, well, I know how much I can sit through. Until it happens, then that perception changes. And you get out and you make decisions based upon not sticking to your plan. All right? So impact on risk tolerance. Let's go down a little bit more. How do you manage volatility in your investing? Diversification. Spread investments across sectors, geographies, and asset class to reduce risk. Now, right now in the current market's conditions, I like gold. All right? Do I put all my money in gold? No. You know something? I've done this as a thing on our YouTube channel, taking you through looking at the top industries. Why not at any point in time look at the top 5 industries, take 2 stocks from each one of them, that'll create a 10-stock portfolio, right? Now you're diversified across the levels. Now you got to think about rebalancing when one of those industries falls out of favor, rebalance it. Take the stocks out of there and go find the next industry and go buy 2 stocks from the next hot industry. That is a great way, diversification and rebalancing together. Keep your asset allocation in line with the goals and the risk tolerance. Plan your trades, trade your plan. Stay the course. And you know something, with all of the volatility that's going on, you'll turn around and you'll make that emotional, you'll do knee-jerk reaction stuff. Stop that. Stick to your plan. And if you get stopped out of a stock, it's okay. If you get stopped out of it and it goes up the next day, it's okay. All right? Make sure you read the charts. Let the charts show you when it's the right time to get into the stocks. Focus on quality. Always consider looking at top VST stocks. Invest in companies with strong fundamentals and sustainable earnings. Top VST stocks will give you that opportunity. Now, I'm not telling you that it's time to buy any stocks right now, but there's a lot of you who don't believe cash is a position and that you've always got to be looking at stocks and investing in stocks. If that's the case, go through the top VST stocks, look at their graphs. Make sure that they're looking good for you as far as going up. The fundamentals are there. If you got to, then that's where I would suggest you stay. But if not, it's okay to be in cash and let all of this volatility go away. But without that, you know, you have different things that you can look at to withstand the volatility that's going on in the market, because the volatility is a beast, folks. It is. Right now, up one day, down one day, up big one day, down big the next day, down big the next day, and back and forth and back and forth. It'll drive any sane person insane, you know? So with that being said, hopefully this video was useful to you. If you're brand new to the channel and you like the content you saw tonight, make sure you consider hitting this subscribe button and the bell icon to be alerted when new stuff like this comes out. For everybody else out there, make sure you hit the like button. Tell me what your plan is to get around all of this tariff and volatility. Let me know what you're doing. All right, put that in the chat as well. Thank you for joining me this evening. Have a great weekend. This video is over. And until the next time, see ya.